Hi, everyone. I have with me today three esteemed gentlemen one more time to talk about the Trinidad and Tobago economy in times of COVID-19. Now, Trinidad and Tobago, like everywhere else in the world, has been hit by the effects of this pandemic. But we've been hit twice in the sense that we have the broad effects of COVID-19 as well as the energy price effects where oil prices have collapsed. Now that means that we're being hit twice. Trinidad has also been downgraded a couple of days ago by Standard & Poor's and is now just sitting on the last rating just above junk, according to Standard & Poor's, already in junk according to Moody's. So we have some challenges in Trinidad and Tobago. I have Roger Hosein, Mariano Browne, and Kevin Ramnarine with me, who've been with me before to talk about what's happening in Trinidad and Tobago and to give their views on the policy decisions and the policy action that the government has taken and their views on the outlook for the Trinidad and Tobago economy, which is especially important now because this is an election year. And a lot of what the government is doing in terms of the policy response has to be viewed as whether it's for appropriateness as a given straight off for a COVID-19 response, but also appropriateness in an election year where there are all kinds of sensitivities. So I thank you, gentlemen, for joining me again for this important discussion. And I want to kick off now, first off, with asking Kevin, as former Minister of Energy for Trinidad and Tobago, can you give us a sense as to how this oil price collapse is affecting us? Does it have implications for the gas price? Does it have implications for production? And therefore, what are the implications for fiscal revenue out of the energy sector?
Okay, thanks, Marla. Thanks for having me. Just wanted to recap some numbers here. When the Minister of Finance read the budget on the 7th of October 2019, of course, that seems to be an entire world away now, 6 months ago. So much has changed in the last 6 months. But in that budget speech, he forecasted that the country would collect 47.7 billion Trinidad and Tobago dollars in total revenue, and that the oil revenue or the energy revenue would be 11.004 or 11 billion Trinidad and Tobago dollars.
Right.
Now, there tends to be a difference between the Ministry of Finance's definition of oil revenue and the central bank's definition of oil revenue. I think the central bank uses a more complete number, which is they include corporation tax from companies in Point Lisas and Atlantic LNG and so on, whereas the Ministry of Finance uses a more strict definition of energy revenue, which are things like supplemental petroleum tax, petroleum profits tax, unemployment levy, royalty, and so on. So essentially, your question is, what's going to happen to that energy component of government revenue? And I mean, it's quite obvious given that when the Minister of Finance read the budget in October last year, he pegged the budget on two price assumptions: oil at $60 a barrel, and natural gas at $3 per MMBTU. Now, the minister spends a lot of time in Parliament explaining the oil price, and he really needs to spend a bit more time explaining the natural gas price. So when I was minister, I wanted to understand this natural gas price used in the budget very, very much in detail. So I'll just spend 2 minutes giving sort of demystifying that number in the budget. The number that's used in the budget is what we call a netback price. So it is the weighted average netback price of all the natural gas sold in Trinidad. So about 45% of the, about 40%, I think, 40 to 45% of the gas which is sold at the wellhead is sold to the National Gas Company. And the remainder is sold to the different trains at Atlantic LNG. So the number which is used in the budget is the weighted average of the price realized at the wellhead in Trinidad and Tobago. So the price that you see as the Henry Hub price and the price that you see as the price in Japan and the UK and in Holland and so on, when we sell into the world market our LNG, you have to subtract from those prices now the cost of freight. And then you have to subtract the cost now of transmission from the wellhead to Point Fortin. So roughly a rule of thumb would be about $2.
Okay.
A ballpark would be $2. So if we sell a cargo of LNG,
$2.
If we sell a cargo of LNG to, let's say, to the United Kingdom for $5, subtract 2, and you end up hypothetically. So that's how it works, right? Okay. So when the minister used $3 in the budget last year, I had come out and I had said that that is too high, because in the previous year, which is the 2019 budget, which he read in 2018, he would have used $2.75. Now, stick a pin in there. Before COVID-19, world natural gas prices were in collapse. In fact, between 2018 and 2019, natural gas prices globally fell by about 40%. There was a big decline between 2018 and 2019. So we were already in trouble.
Could I ask a question there, Kevin? Sorry. What did that have anything to do with the fact that we now know that the global economy was already in a recession last year?
It had a lot to do with a couple of things, one of which was oversupply. There was a lot of new natural gas, a lot of new LNG coming into production in the US, in Australia, US and Australia, and the market was well supplied. And the other thing that was happening is that the global economy was slowing down, mainly because of the US-China trade war. Right. So before COVID-19 became a huge issue, which it became around January, February, the world economy was already in a very bearish state. And that bearishness was reflected in the natural gas price in the Far East, in Europe, and in the United States. Things just got a lot worse in the last, I would say, the last 2 months. And so there is no way that we could even come close to realizing the 11 billion Trinidad and Tobago dollars in oil revenue, which is about 25% of total government revenue. And as I said, that number does not, that number may not include the corporation tax from NGC and the corporation tax from Point Lisa's companies and so on, which is sometimes categorized as non-oil revenue by the Ministry of Finance. So we are in a very dire situation when it comes to revenue. Just to give you so at current oil prices, we're collecting no supplemental petroleum tax, because supplemental petroleum tax only applies when oil is above $50 a barrel. 50? At current oil and gas, oil has to be above $50 a barrel for the government to collect supplemental petroleum tax. So we're collecting, so there's a line in the Ministry of Finance reporting, SPT, 0. Petroleum profits tax, going forward, it will most likely be very small or 0, because in this environment, oil and gas companies cannot be profitable. So they cannot pay petroleum profits tax. The only line for which we might get some revenue is the royalty line. And as the minister himself pointed out in the Senate yesterday or the day before, royalty is a function of volume and price. So we really are in a dire situation with revenue. And he has the numbers that we hear from Mr. Imbert about the revenue whole change. I think the last number I heard was 6 to 7 billion. I think you all may have heard a different number.
I heard 7.
Right? So that number, I think, is conservative in these circumstances. And I think that, so that's our revenue position for 2020. It's going to be pretty bad.
So let's assume we collect out of the 11 that we are budgeted to collect from the energy sector. Let's assume we collect almost nothing. I mean, we're talking then about total revenue of about 37 to 40 billion TT dollars. Okay, that's a huge drop from where we were and what the economy is used to. But before I go to that, tell me, I have seen projections for gas prices this year and next year below $2. And
Yeah.
I have seen oil price projections of 20 something, $30. What is your sense of this year and next year, what our oil price and gas price could
Well,
look
I'll
like?
just, when I used to work, in the energy sector, and people sold a cargo of LNG to Japan, that was a really big deal back in 2009. You sold a cargo of LNG into the Japanese market, and you got $17 or $18 per MMBTU. Now, the most recent price I saw for LNG in the what they call the East Asia market is $2.70 in Asia. Of course, in the US, it's like about $1.70 around there. So natural gas prices before COVID-19 were in a pretty much low state. I don't see oil and gas prices recovering anytime soon. So, I mean, we all know that the world is headed to what, oversupply of 10 million barrels of oil. So, as you know, supply and demand, the world needs about 100 million barrels of oil per day. And what the analysts are saying is that about that demand is going to be reduced by about 10 million in the month of April. In addition to which, we don't know what's happening with the game that is being played by the Saudis. Will they see this as an opportunity to turn the screws, to plunge the dagger even deeper into the United States shale oil industry and to the Russian oil industry? And is April an opportunity for them to turn up the pumps and to finally deal a knockout blow to their competitors in the US and in Russia and so on? So it is possible that oil prices could be headed into the teens. I saw one article by Forbes, which has been sent to me about 300 times on WhatsApp, about $10 oil. In such a situation, it might be best for people to just cap your wells, just turn your wells off.
On that note, what is our lifting cost, break even for oil and for gas in Trinidad? Can you give us a sense of
Well, I
what
think it varies. It varies according to company and according to where they produce oil from.
Right.
But
Deep water versus onshore. Yeah.
So Rystad, the Norwegian consultant firm, said at $30 a barrel, most exploration and production companies have zero free cash flow. The economists had a $51 price as being the median break-even price for most oil companies in the world. So I think that at those prices, most of our oil, at current prices, most if not all our oil production in Trinidad, I know of some lease operators who have some very low lifting costs. And that again is the power of innovation in the private sector. So I think most of our oil in Trinidad will be sub-economic. Our natural gas production, the lifting cost varies. We have some companies in Trinidad who operate like Mercedes, like a Rolls Royce, and we have some companies in Trinidad that operate like a Nissan Tida, and they actually get the same effect at the end of the day. I don't want to call the company who is referred to as the Rolls Royce and the company who is referred to as the Tida, but so some companies have very low production costs and they're very lean, and some companies, as I said, they are Rolls Royce type companies. My before this entire thing happened, I was aware that our major natural gas producers in Trinidad are struggling. Struggling on a cash basis and struggling on an accounting basis. So that was before October 2019, before the minister read the budget. It's been a pretty bad 5 years for the oil and gas industry. If you look at the performance,
one wonders why we haven't made any strides in diversification in that time.
Yeah,
that's something the rest of us will talk about after.
If you just look at the performance of companies in the last 6 months, BP's share price down 51.5%, BHP's share price down 37%, EOG minus 56.1%, Shell minus 55.5%, TTNGL, the lone Trinidadian company on our stock exchange, minus 43.2%. So it's been a pretty bad time for companies in the energy sector, driven mainly by what's happening in the price environment.
So we're going to see soft prices. We're going to see possibly lower production as it's unprofitable for a lot of them to continue producing at these levels. So that equates to much lower revenue than what we're currently estimating. And the 7 billion sounds like it's
so the 11 billion forecasted for oil revenue for 2020 seems to be, if the
in
minister
jeopardy.
If the minister collects 25% of that, I would be surprised.
Okay, gotcha. Thanks for that number. So let's shift now to Mariano. The Minister of Finance, of course, has articulated how bad the situation is with respect to meeting the revenue target, which of course we know we're not going to meet. But then in addition to that, we have fiscal spending that is solely based on the response to the COVID-19 pandemic. So the kind of support that will be given to in the labor market to workers, and also to a certain extent to the private sector. Now, tell us, we've dealt with the energy sector shortfall in revenue that we kind of anticipate. Kevin just said, if we collect 25% of that 11 billion, we're lucky. What is your sense of the rest of the revenue, so the non-energy fiscal revenue? What is your sense of what the deficit could look like? And also that bill that was laid in Parliament, was passed, and, highlighted VAT, highlighted a higher debt ceiling, and also a drawdown from the HSF. Could you share your thoughts on these matters with us, please?
Well, in first place, the expenditure profile for this year was already ambitious, I thought, for the same reasons that that Kevin has alluded to, that we were already in difficulties. The revenue numbers in terms of meeting the targets, and they had one or two little financing elements there. You know that we have been including financing elements as provision as revenue.
Right.
For example, through the NIF as revenue.
Yes, and asset sales as well have been included as revenue, which of course we know is not how you account for these things, but anyway.
Correct. All right. So that there are many aspects that were in difficulty. So just off the top, just looking in terms of what the revenue numbers are, if you were to go back to just look at the revenue numbers from 2013, 2014, where the current revenue at the time was about total revenue and grants was about 58 billion, 58.4, then it fell to 57.2, then to 44, right, then to 36. Right, so that 36 has probably been the low point.
36 was what, 2015?
No, that was the 26, 16 to 17.
16 to 17, okay.
Which energy revenues were approximately 8 billion, but overall tax revenue had fallen from a high of about 27 to about 26. That will include the profits on taxes and profits from the energy sector companies as well, but we should have taken a hit at that time. It's not disaggregated. You really can't tell. And that recovered to about 30 billion last in 2018, 2019. I was projected to more or less stay the same in 2020. Right, so that you're really looking at the energy sector is going to be the hardest hit, because that's really where your biggest cash comes from at the quarter end dates. So that we really are looking at it on a best case situation. Best case, we would be in the line of 16, 17 numbers, which is about 36 billion, whereas the projected forecast was this year was somewhere closer to 47 billion, right? So you're
About 10
talking
billion.
about that,
Yeah.
about $10 billion left, which I think is the number that he said in Parliament.
Okay.
Right now,
Okay.
right? So let's just focus on that 10 billion, because we were already going to be just about 4 billion short. So you're adding about another $6 billion to that.
Okay.
Right? All right. Using his numbers, because quite frankly, I think the difficulty is we don't know how badly this is going to be. When you look at the third quarter review, the third quarter, the central bank put as a warning indicator that the using their weighted average that they use for energy prices was already down 20%. So that means that they already had factored in the declines which would have taken place somewhere to January. Now, if you take the fact that the prices literally fell in half between the beginning of March to the 26th of March. So in 26 days, the prices in the energy sector we're talking about fell by about 50%. And so your dummy variable for how some of those companies are being affected is TTNGL. In fact, the fall in the share price that Roger, that Kevin alluded to, of 43%, is probably low, because the profits had already fallen off by 60%. And when you go to the forward pricing, the spot pricing for butane, for propane, I think, that price has been off by about 63 cents or 63% on the previous year. And in September, when they were reporting in September, they were already off by 60%, not 9 months. So it means that there would have been a bigger fall coming on to December 2019, and that fall has accelerated since then. So all of the energy sector companies would be affected at this stage significantly. So $36 billion might be optimistic in terms of what the revenue number is going to be this year. Now that brings us to how are we going to fill it?
Yeah, how are we financing it?
How are we financing it? Which brings us to the miscellaneous provisions bill.
Right.
And the miscellaneous provisions bill is an omnibus bill, which at one time addresses the Heritage and Stabilization Act, addresses the Value Added Tax Act, and also deals with another provision with regard to
debt ceiling.
Yes, the debt ceiling, right? So just looking at the Heritage and Stabilization Act, essentially what they have amended, they have not addressed the issue of what is heritage and what is stabilization.
What a missed opportunity.
Well, deliberately, actually. This is not a missed opportunity. I have not addressed it deliberately. In the act sets a floor, right? That you may not, the balance of the fund cannot fall below $1 billion,
right.
1 billion US. Well, if the act cannot fall beyond $1 billion US, you have to presume that billion is
heritage,
and the difference is stabilization. And by not interfering with that definition, what you're really saying is that I am claiming the largest share of the fund to be available for stabilization.
Which is about 5 billion US, right?
Which is about 5 billion US, right? In rough terms. So effectively, I'm taking 5/6 of the fund, which is roughly 80% of the fund is going to be available for stabilization, and 20% is going to be available for heritage. And in other words, I am taking the widest possible definition for stabilization, because I may not have the revenue, but I want to keep things going as they are. So I want access to something that could give me immediate cash. The second part of that is that they've also amended the act to give the minister the opportunity to make drawdowns on the act during the course of the financial year. In other words, I don't have to wait until the end. I can draw it down now on an emergency basis, and they've defined the emergency. And emergencies are three. One, a disaster area is declared under the Disaster Measures Act. Two, a dangerous or infectious disease is declared under the Public Health Ordinance. Sounds familiar? And we're in that situation now, so we've clearly captured that one. Or three, there is likely to be a precipitous decline in the budgeted revenues based on the production price of crude oil or natural gas.
I'm putting my hand up, please, Mariano, because I would like you to tell me what does precipitous mean, because I
Right.
don't
Okay.
understand why it was not defined in the Act in numeric terms. That to me is the biggest hole of all the
and that's deliberate, right?
that is
Because
deliberate.
you want to
Because
set limits, and a politician wants to set the widest possible hole that he can squeeze through.
because it means
So
that
that's
he
the
can
reason.
any finance minister can set the revenue target anywhere and then in a couple of months say, well, I'm not going to meet my revenue target because I expect that there would be a precipitous decline.
Well, in real terms, that's precisely what has been happening with how the targets have been defined and how the prices have been defined. If you set the price high and you don't hit it, then by definition, and I think that was the reason actually it was set at $4. I don't think it was set as a pricing mechanism to really define the amount of revenue. I think Mr. Imbert has always said from the word go that the stabilization fund has to be available to meet declines in the revenue. So I think that he set it deliberately high so that when he missed it, if he missed it, he could always make a claim under it. And I think that's the absolute reason why he used the $4 price.
Right.
So I think it was deliberate, and I have to say that our finance ministers have generally speaking been playing footsie with regard to that price and the definition in terms of the Stabilization Act. Either one, to avoid putting more money into the stabilization fund, or two, to access the stabilization fund as quickly as I could. Now that may sound a little Machiavellian and devious, but I'll have to say, if you look at it in terms of the contributions which had been made to the fund, the biggest contribution was made to the fund in 2008. You know why that was the biggest contribution made to the fund?
We had a surplus.
Not only because we had a surplus, because prices surged after the budget. Right? So therefore we had no choice but to put as much money as you could into the Heritage and Stabilization Fund. Quite frankly too, where there was also a lot more money at that time. And what happened, we put, I think at the time they put 1 point, somewhere between 1.5 or 1.3. 1.1 into the Stabilization Fund, and the rest went into the Infrastructure Development Fund. And the other one went, and the other surplus, and they still had a surplus again, even after all that was done, which went into the Consolidated Fund. So the point is, at this stage, I think the revenue number is not a number that we could put our hats on at this time, because the situation is still evolving. Effectively, you're talking about 9 months of the financial year where the price has been declining, and in a very short period of time, a 30 to 45-day period, you have prices which have declined by as much as 50%. So that a forecast at this stage is a guessing game in terms of what the revenue number looks like. So the closest approximation to it will have to be the revenue numbers of 2016, 2017, right, where we're talking about a $36 billion number.
36 billion.
36 billion, yeah. Low point.
36 billion. So that puts the shortfall at least at 10 billion. It could be worse.
Right.
It could be worse.
Okay.
So what you have to play with then, the only thing that you have to play with is how am I going to cut my costs?
Now, well, no, he said there's going to be no
I'm going to get to that point.
Reduction in expenditure.
There's going to be no real reduction in expenditure on the basis of the financing that is available to him up until September.
Right. Yeah. And the end of this fiscal year. Yeah.
Correct. He's not started to address, because we don't put rolling budgets on the table. And that's why this sort of mid-year budget review becomes a much more serious review, because it becomes a pro tem budget in terms of looking at what 21 would look like. Right? Because you have to start planning for it now. Right? This is in fact the budget. This is in fact the planning period for the next budget. And if your income has been cut significantly in the course of your current year, you would have to be very ambitious to start making projections for it to return to the current level in next year.
Right.
So he can only make a statement with respect to what he has control of to September. So when he says that no expenditure is going to be cut, that can only be to the period September 2020. Now, given the fact that this is also an election year, and somewhere between, you could say anywhere from, I don't think it's going to happen in May. So we're talking about an election that would in all probability be sometime in September, because you have to address the budget. You have to address the budget, right? But there you could say that on a worst case situation, it could be between September and December. So at this stage, I think he can only say, and if he, as a good politician that he is, he's only going to speak about what he has control of before he gets into the next budget cycle and before he gets into an election cycle. And this is a sensible position looking down the road. So he will be able to claim that he has dealt with the situation and he's dealt with it adequately in the circumstances and maintain the existing expenditure profile. Now, there are different views on that. Certainly around the rest of the world, everybody has been attempting to do that. So Trinidad is no different from that perspective.
Because no, of course. Now with the kind of sudden stop that we've had in the economy, it's difficult to justify the government really reducing expenditure. As a matter of fact, the government has to really help to prop up, which Roger will help talk about, in terms of job losses and the loss to businesses and so on. That's really, we need to help on that front.
And quite frankly, the measures that have been announced, I don't think adequately address that. But that's another matter.
That's
I think
another
matter, what we're dealing with here, and in fact, again going back to the miscellaneous provisions bill, the second part of that miscellaneous provision bill was not the Heritage and Stabilization Fund, was the value-added tax. And the purpose of amending the value-added tax in Part 5 was for the purpose of meeting, and it comes directly from the provisions of Part 5, for the purposes of meeting any liability to refund any tax, the minister is authorized to make payments in whatever form whatsoever, including the issuance of bonds. In other words, it's a non-cash, this is a non-cash effort on his part. It will count towards the national debt, but it's not going to have any real effect on the economy.
But he did say this in the budget, though, that he will give the VAT refunds in the form of bonds, or raise a bond to honor the VAT refunds, right?
Now, at the time, he had quantified the liability of 4.5, and as you know, I challenged that number. He accepted and gave a number last week, which puts the figure at $6.3 billion. Right? So that's significant. What he did say that he was going to pay off 1.5 billion of that debt in the form of bonds. Right?
Okay.
That was before we had a precipitous decline. Now, what is the real impact of giving back or repaying bonds by issuing paper? What you have done is transfer a receivable into the position of an investment, technically, at a lower rate of interest. If you are in a refund situation, what you have spent is cash. You do not want a non-cash instrument. That might prepare your balance sheet, but it does nothing for your cash flow. And that is probably the most significant issue that has to be addressed in the next 6 months. Because if these businesses don't have the wherewithal, if you want, if they don't have the cash flow, right, paying them with a non-cash instrument doesn't solve matters. They then need to go to the banking sector and discount it.
Yeah.
To be able to put money back into the system. So
that's if somebody is willing to buy it on the secondary market, assuming.
Correct. The banks have said that they will. What is that issue? Is at what price?
Well, not just what price. Remember, the banks have concentration limits as to how much government exposure they can have. And every time there's a downgrade, my understanding of how these concentration limits work in a risk management framework, every time there's a downgrade, that concentration limit gets smaller.
Correct.
Right?
And that works insofar as your name is Royal Bank of Canada or Bank of Nova Scotia, because if they were to hold more Trinidad and Tobago paper on their balance sheet, then they have to push up their risk reserves as a result of which, and they will insist on that. There are two banks that don't fall within that categorization. One is Republic Bank, and the other one is First Caribbean. Right? I'm sorry, not First Caribbean. First Citizens Bank.
First Citizens, yes, First Citizens, right.
Those two banks, because they're headquartered in Trinidad and Tobago, will not share the same level of difficulty from a prudential perspective and a central bank oversight perspective. They may have internal limits, right? But I imagine that the Minister of Finance and the central bank may lean on them a bit. We'll have to see how that turns out. But it raises some issues. So the bottom line is that technically the budget will be financed, but it still leaves a little hole with respect to the cash flow in the overall economy and how it affects business. So I am not clear that on what he has said. No, what we have to wait is to see what he does, right? Because the measures that have been announced as stimulation measures are small. They're not significant. They're not significant, right? Not if you have a $10 billion shortfall in revenue. That has a significant impact on the way the rest of the economy operates. So it's going to be interesting to see how this is. If it's going to be financed in a non-cash form, then you could expect that the domestic economy is going to be harder hit. If he is actually going to finance it in a cash form, in other words, give the businesses back cash, that has a much better impact from the point of view as a supportive device.
Right. Before I switch to Roger, I just have one question though. So the 1.5 billion that's being taken from the Heritage and Stabilization Fund, this is 1.5 billion US, right? Was there a clear indication as to exactly what those funds are going to? Okay, so that just goes into the consolidated fund, and that's what I thought.
The minister has complete control. In fact, because what the minister will say, but I've already given a budget. I already have approval for Parliament for expenditure in a particular manner, right? So I don't need to account to Parliament for the expenditure. So that's what the $1.5 billion is going to do. It's going to plug that gap. It's going to plug that expenditure gap, and that expenditure gap did not include refunds of VAT. That's one of the reasons why he has always been very cagey with regard to the VAT number. And that's why he never said what the real VAT number was. He always talks about VAT to 2015, VAT to 2015, right? And VAT to 2015 was $4.5 billion. But VAT to today's date is 6.3, an additional 1.8 billion.
Wow.
He has also not said how is he going to, in other words, how is he going to refund it? You have to assume, given the implications of the act, that he intends to issue paper, which would not be the best thing.
Right. Okay. Let me just shift now. Roger, you there?
I am here.
Right, Roger.
He's in the dark.
So we have money that's not going to come in, right? That we heard from the energy and non-energy sector. We're looking at possibly just about 36 or so billion US TT in revenues this year versus a 48 or so billion that we had budgeted.
Marla, let me just comment on that 36 billion, please, and maybe Mariano and Kevin could correct me here, even guide me here. So the oil revenue, we went to the last budget at 11 billion, and I heard the minister say we would probably lose about 7 billion here. So that gives us 4 billion. Is that correct?
Say that again. I don't understand.
Yeah.
Well, I think he said his 7 billion was an overall revenue shortfall, and he said in the Senate 2 days ago that it was easier to estimate the changes in energy revenue because it's simple arithmetic.
Right. What was the change in energy revenue from the 11 billion? Was it about 7 billion he said we would lose?
Well, he said it was a 7. He didn't specify it was from energy, but we could assume it was.
Overall, loss in revenue would be 7 compared to what was budgeted.
Okay, let's call it 6 billion. Let's call it 6 billion from energy.
Look, Mariano wants to jump in. Yes.
Yes. Can I just make the point that when he first spoke last week, Monday, not this Monday gone, the Monday before, when this issue first came up and he was given an account for it, he said that he projected that the revenues would fall by an additional $5 billion. And when he was questioned, 4.5 billion, and when he was questioned about the net effect in terms of the rest of the economy, he gave a rough number of about $0.5 billion, right? 0.5. So in other words, he expected a total revenue shortfall of $5 billion in total. When he was speaking in Parliament this week, the number was somewhere between 7 and 10, which means that his initial projections had changed substantially. I just want to put
let's
that on.
use 6 billion for the energy sector.
Why 6, Roger? That's arbitrary. He didn't say 6. We concluded that we might even lose as much as 10 or 11 billion.
No, but I'm only talking about energy here, you know. I'm coming to non-energy now.
Okay.
So let's say 6. So I'm going conservative in relation to his numbers. And I prefer to be conservative. He next estimated in September last year that non-oil revenue would be about 35.7 or 36 billion. But when I check back, non-oil revenue in the previous years averaged about 30 billion. And because the economy contracted, and I was surprised to see that type of number used. And I am going to say that what that number should have ideally been, and Mariano sort of touched on it, that should have realistically been about 30 billion, but he used inflated oil price numbers and inflated gas price numbers, which in turn have externality spillovers for non-oil, and therefore came up with 35 billion. So if we use the more realistic 30 billion that accrued last year and the year before, and that now falls because of the contraction in the economy to about 25 billion, then we are really losing about 10 billion on non-energy revenues, you know. And the 10 billion on non-energy revenues, do you want me to go that over again?
Yeah, I just wanted to make a point here about central bank numbers for
but let me just finish, give this number and you all will comment. So we are losing about 10 billion I am seeing on non-oil revenues, about 6 billion on oil revenues, which is 16 billion, and we had 5.2 billion in the initial fiscal deficit, which puts us beyond 20 billion overall for fiscal year 2019-2020 in deficit.
We have to finance about 21 billion TT dollars is what you're saying.
Based on the numbers that I'm seeing here. So now you guys can interject, but that's what I'm seeing here before I go on to labor and trade.
All right, I just want to make one point here about energy revenue.
Yes,
so
Kevin,
in the review of the economy, and I know we will all understand what I'm saying here, but I know there are thousands of people who will look at this video. So I just want to make this clear. In the review of the economy and in the reading of the national budget, and of course, as we know, when the national budget is read, a package of documents is laid in the parliament. One of those documents includes the review of the economy. The revenue that is put into those two documents, the budget and the review of the economy, oil revenue is $11 billion for fiscal 2020. That's in the review of the economy in the appendices. In the most recent central bank economic bulletin, the one that is the most recent on the central bank website, they have for energy revenue $16.4 billion. What is the difference? The difference is that the central bank includes corporation tax from Point Lisas and corporation tax from Atlantic and corporation tax from National Gas Company. So
but Kevin, if we comparing, we want to compare like with like, and could we stick with Ministry of Finance definitions and numbers? Because if we're saying that it's 11 billion we're supposed to get from the energy sector, which does not include corporation tax, that the central bank. Could we just stick with that 11 billion?
The reason I'm making that point, Marla, I'm making that point to show that the vulnerability of the economy to the energy price shock is beyond $11 billion.
Right. Okay. Yes, right? I hear you.
Agree.
Yes, I hear you.
And that's why, Kevin, I am contracting the non-energy revenues based upon the positive externality spillover from energy revenue spending on the non-energy sector. So anyway, we have an idea. Let's say it's between 15 to 20 billion. Let's go with 15 billion. So that's
Total
a serious significant
decline?
total revenue, yes.
Okay. Why we going to 15 when we just agreed 20 or 21, Roger? I find you being
it's good to be.
conservative, but you're being generous.
Yeah. No, I like when I deal with these numbers, Marla, to always err on the side of caution. So
But
I prefer
you're
to
erring on the side of optimism, not caution.
But the thing is, 15 billion is an extremely large fiscal deficit. It's one-third of your actual revenues you have budgeted for. So I'm comfortable enough to use that conservative number and proceed. Now,
okay,
what's the implication?
We have two scenarios then. We have 15 and we have 20. Okay, let's call it that.
Let's go to the economy.
Right.
I did a V-shaped response to the recession, a U-shaped response to the recession.
Meaning V-shaped
and L-shaped
recovery, right?
Yeah,
meaning
I'm going to explain that. And an L-shaped response to the recession. A V-shaped response is when you just have a contraction and within one period of time, one quarter, you recover. A U-shape is probably 2 quarters. You bottom out for 2 quarters and then you recover. And an L-shape is where you remain at the bottom of the trough for about 2, 3, 4 quarters and then you recover. So I made some assumptions. I let the unemployment rate increase from the 5.5% proposed by Standard & Poor's for 2019. So I used the most recent estimate. And then I increased it to 2020 to 6% in the case of a V-shape, 7% in the case of a U-shape, and 8% in the case of an L-shape. And then I made some modifications to the labor force participation rate from the 58.7% that held in June 2018. I let it be 58% in 2019. And then I brought it down in the context of the pandemic to 57% for the V-shape, 54% for the U-shape, and 50% for the L-shape. And these numbers, assuming a constant output per labor ratio that hold in 2018 will hold in 2020, show some sharp declines in real GDP. In one case, in the L-shaped case, it fell by as much as 18%. And again, Marla, let's be conservative. Let's assume 18%.
18% contraction, real GDP contraction, if we have an L-shaped recovery. That's what you're saying. Roger, did we lose you? Just when it was getting exciting.
Roger was about to tell us about the L and the U and the V.
Oh my.
I think he's having electricity.
Yeah, oh gosh.
Well, just to go back to the bottom line.
I hope he realizes he's off and isn't carrying on a conversation by himself. Anyway,
the fact that you won't be asking him many questions will let him know that.
I guess, and I wasn't interrupting him. But I mean, let's just go with what he was saying there. So, I mean, V-shaped, we know it's not going to be V-shaped, where you have just 1 quarter of contraction. I don't think it's going to be U-shaped, where we have 2 quarters of contraction. I think this L-shaped, where it's 2, 3, 4 quarters of distress, I actually feel that's more like what we're looking at. And he's saying unemployment at what, 8%, and a real contraction in GDP of 18%. Gentlemen, how do you all feel about that? I feel that doesn't sound too unreasonable to me.
Well, no, it doesn't sound unreasonable. And it definitely can't be a V-shaped recession. In other words, a short recession. It definitely can't be a U-shaped one, which is only two quarters, for the very simple reasons that the 2 underlying structural issues are the energy sector.
Yeah.
And the energy sector problems do not go away, even if the world economy recovers. And let's just see what the IMF is starting to suggest. The IMF is starting to suggest that the OECD countries will start to recover in 2021. They didn't say whether it was going to be a sharp recovery or not, they're saying that they expect some recovery in 2021. In other words, not for 2020.
No, exactly.
Right? If anything at all, it might be a what you call it. It may have some level of positive growth, may have, but it doesn't sound as though it's going to be greater than 1%. So, and that will be a significant fall. It means that the economy, the world economy, would have slowed down by approximately 2/3 of the number that they originally projected.
So let me just interrupt you there, Mariano, because we do have a lot of time left as well. And given that we've lost Roger, here's what I want to ask. Both of you all were in politics before. And I mean, I'm an economist. Of course, I don't think like a politician. But if I were to put myself in the current administration's shoes, what I would do, and which I kind of hope they would do, and I want you to tell me what your thoughts are, is I would put my hand up and say, you know what, I surrender. I did everything I could. We did everything right. We stabilized the economy and we put things on a stable path. And then this COVID-19 and oil price shock hit us and everything fell apart. It's not our fault. We did our best. Here's my get out of jail free card. I'm going to go to the IMF. I'm going to ask for help, because now is the time to do that and get away with it in terms of minimizing the political price I would have to pay to do that. That's what I would do. Let me hear what both of you all think. Kevin, you tell me first. What are your thoughts on the going forward? Meaning there is an election, as Mariano suggested, in the fourth quarter of this year, third quarter at best, September at best. What is your sense of what's going to happen in with regard to that?
Well, what we are in an unprecedented situation, of course, and there's no precedent for it in the history of Trinidad and Tobago, in the history of the world. Listening to one presidential historian who has written 4 biographies on U.S. presidents, she was asked about her perspective on this, and she said the only time in history that is equivalent to this is 1929, when the Great Depression was triggered by the crash of banks in the United States. So, and that Great Depression was certainly an L-shaped recession. It lasted until I think early 1940s and ran for most of the 1930s. The government obviously needs money, and the money is to, of course, deal with that deficit that we just pointed out, which is going to be sharp and severe, and probably going to have more expenditure allocated to the Ministry of Health and so on. The question is, was the Heritage and Stabilization Fund the only option available to government? I know you have put forward the idea of the IMF has made emergency funds available. The World Bank has made emergency funding available. I think the question that a Minister of Finance, would ask is how quick could those funds have been accessed by Trinidad and Tobago? I think the HSF was the fastest in terms of getting money straight into the consolidated account and so on. The other issue I have with the HSF, Marla, I think you had raised it, is why do we need US dollars? If we have to fund a deficit in the budget, which is in Trinidad and Tobago dollars, why did we need US dollars to do that?
I'm back on.
You had put forward the view that we could borrow TT dollars from the local banking sector.
Exactly.
So I agree with you that I'm agreeing with you that there were other options. There were a menu of options available to the Minister of Finance, but I'm saying I'm putting myself in the position of the Minister of Finance, and I'm saying perhaps, and I'm giving him the benefit of the doubt, perhaps what drove his decision was speed.
Okay, Kevin, let me just interrupt you there because Roger is back on. I want to give him the opportunity to finish what he was going to say.
Thank you very much, Marla. So yes. I had reached the point where I was elaborating on a V-shape, a U-shape, and L-shape response to the recession, where the V-shape is we just have one quarter and we catch back up in the other quarter to our growth rate that existed before. The U shape is probably about 2 quarters at the bottom of the trough, and then we start to grow. And the L shape is about 3 to 4 to 5 quarters where we remain at the bottom of the trough, and then we very slowly start to go on a lower trajectory than before we contracted. More and more, this pandemic seems to be extending itself. So, for example, overnight we had a 10% jump in cases in Trinidad. I'm not sure if you all are aware. And maybe it's now starting its exponential growth as we see in so many other countries. I don't know. But this could probably last until June, July, August, even September. And if it does, and given the adverse price shocks, it means that all of 2020 and even into 2021, our economy could be contracting. Certainly some firms will be driven completely out of business. And as James Steibout says, whilst exit from an industry is immediate, re-entry could take as much as 5 years in some cases. So on that basis, this is going to change the economic landscape for Trinidad and Tobago, very clear. But the point at which I think I got cut off, I was saying the following. I don't want to hear people saying that it is because of COVID-19 that the economy is in a crisis.
Correct.
In 2016,
that is exactly what you'll hear.
The 6th worst in the world. In 2017, we contracted the 11th worst in the world. In 2012, we were the 16th worst performing economy in the world. And in 2019, assuming 0.2%, we would be about the 15th worst performing economy in the world. And so, but one of the things that I heard, when I came back on, I heard Kevin saying that I agree with. I want to also give the Minister of Finance, although I don't agree with dipping in the HSF as the first port of call.
Thank you.
Amen. Because it's a pandemic and it will take time and people's lives are at stake. I have to support him in going that route, and hopefully when we get money from elsewhere, we implicitly put money back into the HSF. I would have to support his stance on this one. We don't often agree on many things, so the things we do agree on, I want to make sure and flag.
But Roger, I think there was no discussion in the bill or otherwise of using any other method of financing when it comes to replenish. What do you think?
He did on one of the public announcements. It could have been last week, Monday, or so. They are on air quite a few times now. But on one of the occasions he spoke, he said there are 4 options from which he can get money. The HSF, the multilaterals, the bilateral foreign, and the domestic market.
That was the first conference. That was the first press conference.
Right. And I still think he would have to go to all of those places, Marla.
Of course.
I'm just saying, in the middle of a pandemic, so imagine your daughter or your son is sick. Listen, just give me the money and we go deal with that after. Which is the approach I think the minister took.
I agree with you, Roger, and it's okay, fine. Let's agree to disagree on the timing issue. But my point is, if that truly was the intent, that we access the HSF in the short term because it's really an emergency, then what about the intent to replenish when you could replenish from other sources of financing? That there was no discussion on that.
That's where the people like me and you and Mariano and Kevin, we need to hold the minister to task as the days and the weeks and the months unfold. But during the middle of a crisis and a pandemic, I don't want to take the gamble with the lives of my people that we would have made that type of error. That's just my simple view.
Okay, Roger, we're running out of time, right? But we're looking at possibly, let me just try to wrap up what our concluding, I guess, ideas and thoughts are. We're looking at possibly anywhere between 15 to 20 billion TT dollars in a deficit, in the size of the deficit, right? We're looking at an L-shaped recovery, meaning that we're not going to see any kind of meaningful recovery until 2021. We're looking at, I think you said, if it's an L shape, you said, Roger, 8% unemployment and 18% real contraction in GDP. Am I?
Possibly, yes. It
Right.
can go to that level, yes.
Right. I will give each of you 2 minutes to conclude by telling me, we have an election, we have this situation I just outlined, L-shaped 15 to 20 billion shortfall, 50 to 20 billion in the deficit side, roughly 18% contraction in real GDP, 8% unemployment. My own view is that if I was the government, any government, this one, or if there's another government in place after an election, I would wave a get out of jail free card that we are dealing with something we've never dealt with before. I need to go to the IMF and ask them for a full-fledged IMF program to help me resolve my balance of payments and fiscal crisis, as well as deal with my other underlying structural issues. And I'm saying that now is the time to do this because the political price will be minimal because of what we're dealing with right now. And the longer we wait, the higher that price politically will be. That's just my thought. I want each of you, Roger, I'll start with you. Then you and give me 2 minutes and tell me what your
no problem.
Yeah.
I would support the minister going to the IMF as the pandemic fizzles out. I think we have no choice. It will give him political leeway to cut chances and subsidies. It would help him rationalize the rise in debt, which could go as much as 75%, even higher in terms of the debt to GDP ratio. And it would help him get expert, experienced professional advice from people who do this all over the world that could use it for the benefit of all Trinidad and Tobago. And I therefore support at the end of the pandemic, or when we see it fizzling out, that the minister go that route. Thanks.
I appreciate that view, Roger. Thank you. Mariano.
For one, I don't see any recovery in 2021.
Oh, okay.
That's optimistic at best. And that presumes that oil and gas will some of the other gas in particular, say some sort of recovery by 2021. I don't see that happening. I see a continuing deepening of the problem in terms of the energy sector, because we're not clear how this energy crisis, when I say energy crisis, I'm talking about the fight for market shares will affect prices in the long run. So I don't see any recovery in 2021 for Trinidad and Tobago. The rest of the world might, Trinidad and Tobago no. Two, what you suggested is perfectly logical and realistic with regard to saying that we have difficulties in terms of a pandemic. I want to say to you that the words of the Prime Minister were exceedingly clear when he spoke coming on to the end of last week, I think last week Friday, not this week, last week Friday, when he said that they will access whatever multilateral funds are available for grant money, but not for any IMF program. There's going to be no conversation about restructuring or dealing with the economy until after the election is won or lost. That's the only time you're going to hear that conversation. In fact, you're going to hear about potential recovery and everything else, a plug in the gap, and the fact that we'll save the economy and so on. You're not going to hear anything about the long-term structural issues until I have won the election and I am now coming into office, when I will then say, boy, the situation is worse than I thought. These are the things that we're going to have to do. That conversation will not start until after the election.
Okay.
That's one.
I want to agree with you.
Completely out of the picture.
I want to agree with you. Yes. Thank you for that, right. Mariano.
And the other point, and the reason why I'm not seeing any sort of turnaround quickly, is that the size of the deficit is already in excess of, it's just that the deficit has not been recognized. If we take the unpaid debt to the bondholders, sorry, not bondholders, to the VAT holders at about 6.3, that does not include the tax refunds, which we've not heard about and which have not been quantified, but that exists as well. That also adds another couple $2 billion, I think, in terms of the refund situation, at least one. So that carries it to 7. Then we have unpaid contractors and unpaid creditors who are not included in it. And then we have to talk about the deficit that exists in the consolidated fund as we speak. Those issues are structural issues that have to be dealt with in the longer term. And the size of the deficit, the real size of the deficit, not the one that has been announced, but the one that we have not recognized, is much deeper than we are. So I don't see any recovery. There are substantial economic issues which have to be dealt with. They are not going to be dealt with before the election.
Wow. Yes, Mariano, I agree with you. And yes, the level of arrears that we accumulate has to be added to the size of the deficit that we report for us to get a true idea of the deficit. You are very right. Thanks for reminding us about that, and thanks for participating. Kevin, let's end with
Well,
you.
it's just daunting just listening to Mariano, yourself, and Roger. I just want to end on a couple of points. First is that Winston Churchill said that we should never let a good crisis go to waste. And I think that this COVID-19 crisis, unprecedented in world history as it is, presents Trinidad and Tobago with an opportunity to really reboot the economy.
Of course.
And to look at efficiency, ease of doing business, and food security as national priorities. So I think that is not going to happen between now and the general election. It is going to fall to whoever is in office beyond the general election. But it is a huge task, but it is doable.
Yes.
The second issue is the issue of the global economic recovery, because we would only recover in Trinidad when the global economy recovers, and that is going to happen when demand starts to return.
Yes.
There's been demand shock throughout the world. It started in January, February with China decreasing their oil consumption by some 2 to 3 million barrels of oil per day, and now the United States and Europe. And I think that demand is going to return when the rate of infections in Europe, it's already peaked in China, when the rate of infections peak in the EU, because Spain and Italy are heavily impacted. And I still consider the United Kingdom to be part of the EU, by the way. And they have issues too. Germany has quite a high incidence of infection, but they've been able to keep the deaths down pretty low. And it will determine, it is important to when it peaks in the United States. So the peaking of the infection and the tail thereafter will determine how quick demand returns. I don't see that happening in 2020. I don't see demand getting back to 2019 levels in the year 2020, probably in 2021. So we are in for a U-shaped, at least certainly not a V-shaped recovery. And I know that there are some people in the US, some of the investment banks are seeing a V. I'm seeing a U like everybody else.
L.
And but some people are seeing a L, which is that Japanese scenario that Roger talked about, and possibly the Great Depression of the 1930s
but if
scenario.
you think about it, Kevin, I mean, we really haven't recovered from 2014, 2015, so we were already in an L. Why should this be any different? So I think this is a continuation, or if not a leg down further, and another L, an L below an L.
And I'll close by making one more point, and that point is that we have to have our leadership in Trinidad and Tobago clearly and in a very crystal way define the reality for us as an economy. We cannot have a picture being painted for us, which is that all is well and we are doing great and we have maintained investment grade and so on. We need a very clear and concise definition of reality if we are to navigate the economy beyond COVID-19.
Yes, thank you for that point, Kevin, because you know what that raised, and this is my pet peeve, and I go back to this every time. It requires leadership. Everything that could help us get out of where we are now requires leadership, and I feel that is one of our fundamental problems in Trinidad and Tobago. I feel like we do not have the leadership that we need. But anyway, we need to stop there, gentlemen, because we could do this till tomorrow, right? Through the curfew I have here in Barbados from tonight. I really appreciate your time, and I appreciate your thoughts and your insight. And we'll do this again. We will be due for an update in a couple of weeks. So make note of whatever you wanted to say that you didn't get a chance to. I really appreciate that you've shared very openly with me. And good luck. I wish you and your family safe passage through this storm. Thanks and take care.
Thank you.